Hi guys. Today I am going to break down a trade that I took in the last several months. This was a question I think Bullish Babe had asked me how I trade my swing trades, and she asked me off camera, and I don't think I did a very good job of explaining uh, my goal and what I try to do. It doesn't always work out, but this one did. So if you look at the chart, the candles might look different. This is the Bubblegum Chart that I created for my grandson and that I also trade off of. The ticker is LBRT, Liberty Energy, and as you know, energy has been on fire lately. So it's a 2-day chart. Every candle represents 2 days, and I entered both with shares and 2027 LEAPS back here on this candle, which was Friday, October 3rd of 2025. One of the reasons I got in is it had broken structure back here. Let me just draw that in for you. And it broke structure. I got in before the pullback. It pulled back and then it just went. I was willing to risk. I got in around $13.30 with my shares, and I'll show you my leaps in a few minutes. My stop would have been below this trend line going up, so I was willing to risk $4 on this because of the potential. My target was the last high up here around $23. So that would have been, as far as my risk to reward, almost a 3-to-1, almost a 3-to-1 risk to reward. And as you can see, it is now up to 31.45. This was my initial target, and I didn't take any, although I did trail it up. And I want you to look at a long-term, well, let me change it to a weekly. So we have just broken out into all-time highs. You can see we had 1, 2, 3, 4, 5 on the 6th attempt on the weekly. It broke through, and as you probably know, if you're a trader, the wider the base, the higher the space. So I am expecting this to continue to go up, but I want to explain what my plan is. So as you can see, I bought 100 shares, and then this 2027 just tells me that I have long-term leaps on it. So let's break down the cost. Let me get this organized for you. Okay. Let me make this bigger. So here you can see I bought shares of the common stock, and here I bought January 2027 calls with a 15 strike. You can see over here that I bought 100 shares and I bought 3 calls. So the 100 shares cost me a little over $1,300, and the 3 leaps cost me around $930. So together, this is about $2,200, a little more than $2,200. And my shares have gone up 136%. my LEAPS have gone up 460%. So my plan is to sell the LEAPS. So if you divide my cost, 932 by 3, they were roughly $300 a piece, and or $3 if you want to say it that way, $3 each, and now they're up to $17.40 each. So my plan is to sell the LEAPS, which will more than pay for the cost of the shares. So if we take, well, 42.90, let's just round it up to 43. 43 minus 1,300 is I'll have a $3,000 gain, and it will more than cover the cost of the shares, which is my goal because, excuse me, I'm at a point in my life where I not only want to make a profit, I want to build income producing assets, which this will now be for me because I can hold it forever. My cost basis is zero because the LEAPS paid for everything. And if this pulls back all the way back, it won't matter to me because they're free shares. If it continues to go up through the years, which I am anticipating that it will, based on what the chart looks like and based on what we know about energy, I will then be able to sell a covered call every month and bring in additional income, making this an income producing asset. So this will go onto my children and my grandchildren forever. It's a free asset. And I hope this explains to you what I try to do. Like I said, it doesn't always work out, but this one has. So thanks for the question, Bullish Babe. And I do have another interview coming up next week. Maybe I'll get it out in the next 10 days. And I hope everybody has a fabulous trading week. Thank you.